Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, December 1st. Wow, end of the year, basically. So we're counting down to Christmas and New Year's and start all over again. So let's kind of jump right into economic news releases. And the first one will be the jobless claims. We've been kind of averaging under 400,000 last couple of weeks. So the previous was at 396. We were figuring it would drop a little bit more down to 393, and it actually went upwards. It kind of went above the magic number of 400,000. So that's kind of a surprise a bit after having a few weeks. I didn't think we might see it personally until probably around January when the season jobs, seasonal for the holidays. Dry up a little bit. So, and then those people might go back on unemployment. So, but this is a little bit sooner than I expected on this. Next item is the ISM. This is the manufacturing. We had back in October it was 50.8%, and we figured it'd go up a little bit, and pretty much we did. Went up a little bit higher than the forecast, which is kind of good news. And then we have construction spending, 0.2%. We figured remain the same, and actually construction spending went up. So manufacturing construction spending looks like some growth there, so that's kind of the good news. So we'll just jump over to the headline news. And headline news, basically, it's not a whole lot there. Just basically, the stock market's down a little bit. A lot of it has to do with some of these big gains that they've been growing a lot, and with the excitement over Black Friday. And now they're figuring, okay, maybe Black Friday hasn't, maybe that won't translate into continued growth throughout the whole holiday season. So right now, I think they're kind of taking a little break, kind of watching it, as that was kind of more on Monday. It was more of the emotional push, and then yesterday was kind of an emotional push as well when we had the Fed, the central banks around the global central banks announcing that they're going to create more liquidity by using the dollar, exchanging with the euros and stuff to help out the European countries with their credit crunch that's going on over there. So we had a couple of emotional days there and some high growth. So I think right now they're taking a little bit of a break, kind of correcting itself a little bit, kind of re-examining. Does this do they expect this to continue with the at least with the growth and such? So let's go ahead and take a look at the sorry about that, folks. Let's go ahead and take a look at the sorry, that was yesterday's. Let's go ahead and take a look at the bond market where the interest rates are. We had some pullbacks here, as we saw. We pull back here. A lot of these days we start lower. Like today, there's no exception. We started off about 18 basis points lower than where we left off yesterday. Currently, we're up about 9 basis points. So right now, interest rates on the rate sheets that will be coming out this morning will be a little bit higher than what they were yesterday. So I would expect that be slightly higher, but they could improve throughout the day depending on how much this grows. So again, interest rates are probably either the same or slightly higher than they were yesterday. And yeah, so that's about it for today. I'll see you guys tomorrow. If you guys are on my site, mikesdailymarketreport.com, please subscribe. Or if you're on my YouTube channel, please subscribe. You guys have a wonderful day.